Impressive performance from landmark stores with more to come. That's the headline in the annual report today from AIM-listed self-storage company Lok'n Store. It's reported a 4.1% rise in revenues with adjusted group EBITDA up 10.8%, generating a 12.5% rise in dividends. Andrew Jacobs is Chief Executive. He joins us now. Andrew, welcome.
Good morning.
I know that you are adding more sites this coming year. Do you, as CEO, think you've got the capacity to repeat last year's performance on your existing business structure?
Oh yes, I mean that's an essential feature of the business, that each of the stores when we open them goes through a period of fill up, and we've been seeing that in these results here. And obviously we think the UK market still can take a lot more self-storage facilities, so we've continued to acquire. We opened 3 in the last year and we acquired 4 more to be open 2017, 2018 that will add further to the growth of the business.
What is your spare capacity then in the stores that you've got open already?
We're currently running about 65% capacity of the existing stores.
And is that typical of your business, or do you anticipate that that's going to rise as you see these new ones come on? Obviously, you've got presumably more capacity there.
It's fairly typical for us. I mean, some of the older stores and the smaller stores run at 80–85%, and of course, new stores when they're open have very few customers in, so running at a very low percentage. Obviously, part of the business exercise is to make sure that the new stores fill up quickly, particularly quickly get to cash flow neutral and start to make a contribution to the business.
And I think you've got, what, 3 or 4 more coming on? Is that what's in the pipe, I think, isn't it?
We've got 4 more in the pipeline, yeah, that will be open in around a year's time.
And are they all going to be within the same geographical area? Because I noticed actually on your website, the map that's up there, you're south of Northampton and east of Bristol. Is that maintaining your focus?
Yes, largely. I mean, we're not going very far. So in the Northampton area, we're going to Wellingborough, which is 7 miles up the road. So it's not a huge extension on the geographical coverage. To the east, we're going out through Gillingham and Broadstairs, and at the moment, I think we're in Ashford and we're in Crayford. So it's a little bit of a push out to the east. So
would you like to expand that further north? Is there an opportunity up there?
Well, the self-storage is quite a retail and operational style business, so we like everything to be reasonably close contact. So at the moment, none of our stores are more than 2 hours drive from our head office in Farnborough. So every time we go a little bit further away, we feel we have a little bit less control. So, you know, the UK market, as I said, is very underpenetrated. There's a lot of areas within our existing geographical coverage where we would like to open stores, and that's really our preference.
And I know that you operate from the smallest of storage units right the way through to big corporate facilities, don't you, where you can store business items. Is there any area where you would like to see a further expansion within that portfolio of business that you've got?
No, I mean, we as you say, we do, our smallest unit is a 4 foot by 4 foot cubic locker, up to several thousand feet that we would rent to a big business or a government institution, a university or a hospital or customers like that. So we really are filling in the whole spectrum of customers.
Where do the best margins come from? Is it the small units, or do you get the better margins from the larger?
All customers will pay roughly the same rate. Inevitably, if you're renting a bigger unit, you get a slightly lower cost per square foot, but the margin is the same on all of them. And
you're finding it easy to find new space? So you say you've got 4 more facilities coming on. Well, is it easy to find new
It's
areas?
interesting because I started in the business about 20 years ago, and I thought it was a revelation to find this interesting industry that had all this capacity to grow. And here we are 20 years on, and we're still finding new opportunities to grow the business just as profitably as we did 20 years ago. So we acquired 4 sites last year. I would hope we can keep acquiring a handful of sites each year.
You've just put in a £40 million banking facility agreement with RBS. I know this is all part of your topping up the balance sheet every so often. What are the agreement terms here? I mean, what's it look like for the next 5 years now? What lending rates you got?
I mean, we've been rolling. It's the same size of facility as we've been running for the last 10 or 15 years. We've actually paid down our debt a little bit in the period. I think the lesson of 2008 and 2009 is you want to make sure you're the least leveraged company in your sector, which we are. The terms of the facility, it saves us about 1 percentage point on net debt over each year in the period, so it's quite a significant saving for a business like ours.
Yeah. Let's take a look at the share price. I think you've just actually topped out at a record high, 380 odd pence a share. So shares have gone up today after having seen these full year numbers and what you're anticipating for next year. What do you tell investors about where the share price is? I think you've got a market cap of just shy of 100 million, I think, at this sort of level, haven't you? About where you're going, what your expectations are in terms of delivery to shareholders.
Yes, well, I mean, we've been delivering fantastically well over the last 20 years. When we first sold shares to the public, it was 38 pence, so I guess it's 10 times that price now. The conversation we were just having about new stores, we're still finding nice new sites to open. Every time we open a new site, it delivers extra value to our shareholders. So we continue to raise the dividend, and we're planning to continue to raise the dividend. We've got lots of headroom, so the cash available for distribution that we use to calculate dividend capacity was up 17% in the period to 18 pence, and we're proposing a 9 pence dividend. So there's plenty of headroom to keep moving the dividend ahead. The net asset value, as you mentioned, of the business is £3.86 today, I think. So the share price is only reflecting the current underlying value of the business. So I think there's plenty more to go for.
We're hearing about today, especially a little bit of risk off in the markets. They're talking about higher bond yields. There's the prospect of higher inflation. Certainly, economists are talking about that. The base effects more than anything else, but other aspects as well feeding through into inflation potentially in the UK economy next year. I'm hearing 3, possibly 4% next year. How would that affect a business like yourselves?
Well, I mean, the great thing about self-storage is a big part of our cost base is already sunk into the buildings. You know, we're spending about £5 million each for these new landmarks. Many of them, the majority are owned freehold. We're now the majority we're building from scratch, and the in cost is about 5 million. Obviously, that's a sunk cost. So past inflation doesn't affect that. Going forward with our customers, the contracts customers sign are on a 28-day notice period. So it's very flexible for us, and it's very flexible for our customers. And indeed, that's the product they're buying. The flexibility is the product they're buying. So we have the ability to raise prices every 28 days. So we're very nicely positioned. If there is inflation, it's really not a problem for us.
So what keeps prices where they are? Is it competition in the market, or is it because people won't pay anymore? Because if they won't pay anymore, it doesn't matter how much headroom you think there is, you've got to get the people in through the door.
In general, it's about the competition in the market and the level of demand in the market. You know, if we're in a very busy, affluent town, then pricing tends to be very strong. If there's a lot of competition, it will have a dampening effect on pricing. If you're in a smaller town or a weaker, economically weaker town, then pricing will be a bit softer.
Yeah. Brexit. Looks like we're going to be leaving the EU. Doesn't matter which way we cut it. You're a British business, of course. You report in pounds. To my knowledge, you don't have any income coming in from outside of the UK. All the shenanigans going on politically at the moment, does it matter to you?
I would say we're probably one of the businesses on which it'll have the least impact. We don't have any imports, we don't have any exports. We're not particularly exposed to any particular area of the UK economy. As we were saying earlier, we have big customers, small customers, we have corporate customers, we have household customers. So the thing that will affect us is if the economy slows down greatly. We're not particularly bothered with 1 or 2% here here or there, but if the economy went into a deep recession, that would have an impact on our business.
Yeah. Okay. Well, let's assume that's not going to happen next year. What have you got in your in trade? What's the priority this year for you? You've already spoken about the pipe, that you've already got new capacity coming on. What else have you got that's going to be your utmost concern? As I say, going back to shareholder delivery.
Yes. Well, the focal point for us of the business and delivering to shareholders is opening more new stores. So we're working on the 4 that we bought last year, and we're always looking at more opportunities to buy more. Yeah. That's the focus of the year.
Andrew, thanks indeed for joining us. Andrew Jacobs is the Chief Executive of the AIM listed company, Lok'n Store.